Okay, hello guys. So this was a nice Gbpusd sell entry we took, and it was a very nice entry because the market was heavily bearish and the market has had to retreat back after reacting to a 4-hour demand into the EQ, and we hop into the chart to analyze how we took the trade soon. So this was the entry we took. We set our sell limit here, and the trade was executed, and we were hoping to take. This was the result. This was the result of the trade we took, and we didn't get a really deep push into the discount, but at least we sold from the premium, and we got some pips to hedge in for some sales, and yeah, that's how we got the entry. So this was the results after our entry, and the market reacted from this demand because it was also a nice demand, and the market is around the EQ. And if the market is always around the EQ, it can be very choppy. Any demand it will take, any supply it will take. Yeah, that's how the market behaves after a heavily bearish and a retracement, yeah, or heavily bullish and a retracement. Yeah, so that was why the market reacted from this zone, and it was also a good zone because it had inducement and it was a flip zone. Yeah, so it didn't take much liquidity, but at least it has to major confluence. It was a flip zone. A flip zone is a very solid zone, and a demand an inducement to is another one. This was an inducement. This was an inducement for the zone, and the market took it from there. So let's hop on to the chart and see how. Yeah, hello guys. So this was the market on the 4-hour time frame. So the market was heavily bearish, and when it's heavily bearish like that, it mostly takes a demand and retraces back to the EQ of the current price action. So this was a 4-hour swing high, and this was a 4-hour swing low. Yeah. So if the market takes the demand, it's probably, or 90% of the time, retraces back to the EQ. Yeah. So if you take the parallel line, you can draw from the low to the high to get the EQ. Yeah. So if you get your entry confirmation from this demand, you can hedge in for the EQ, that's a buy, and take your full TP at the EQ. If you reach the EQ close, don't trade until the market leaves the EQ. Yeah, that's how it is. Because if you hedge in and take your TP at the EQ and you try to play along, and maybe you are not that professional, you might lose everything you had here. Yeah, because that's how the market can be very consolidating on the EQ for some time. Sometimes it can consolidate for a week or two before leaving the EQ. Yes, so it happens most of the time. So if you get price action like this and you get your TP, just relax. You can play or hedging on the 15 and 1 minute time frame for some small shorts and longs, but you shouldn't anticipate higher until the market leaves the EQ. Yeah, so we saw the confirmation on I think the 1 minute time frame. 1 minute time frame. Yeah. So the market retraced back into the premium of the current price action, that's the 4-hour swing high and swing low, and the market had to continue being bullish or deep, had to go deep into the 4-hour premium, but the market the market shifted after reacting from a flip zone. I think, okay, there was a 2-hour flip zone that the market reacted from, and it shifted back to bearish. So this is a very tiny confluence that you can get to get your entry, but after the market, this was the last demand. This was the last major demand on the 1 minute time frame that the market should have held for price to continue being bullish, or for the retracement to continue, but it failed, and mostly if it fails, these are all sell side liquidity. David Bowen said that he always put his entry at where people put their stop. Yeah, so these are buy stops. There's a lot of entries here, and people have their stops. People have their stops beneath these places. So the market will retrace back, take out people's stops, then continue being bearish. That's how the market is. So if you are very consistent in the market, you will know where people stop are. You have to know where people stop are. Yeah, so that you put your entry there. So that if the market takes them out, you are in, and that's how you win. And this comes with time and experience. Yeah. Yeah, so that was how I got, and I took the sell from this side, and I just had a little tap. It didn't even push in very deep, just a little tap, and I saw the shift. But after I got alert. I didn't come to check because it was just late night, and this time the market can be very choppy, spread hours and all that. So we just have to relax and see what the market does. So after it reacted, and I came back to check later, I saw that the reaction was okay, and that was when I had the confirmation that okay, to maybe to sell deeper. But the highest confirmation was that it would take out this low. Yeah, that was why I was very okay after I had an alert that that's taking this low. Yeah, so but I was hoping the market would have pushed deeper. But price action is king and the market is always right. This was a good demand for the market to react from. So it was very cool. So it has inducement, and I think there's a little sweep of some. I don't know. There's no structurally liquidity sweep, but this was a nice flip. I think it reacted on some supply here. This was a nice flip that can also hold the market because we are close we are closing the EQ, so you should know that in the EQ the market can be very choppy. So any demand it can pick, any supply it can pick, and this was a good demand, and the market picked the demand, and everything showed that it was okay. At first you had a change here, and you might think maybe this is it. You might take a loss, but if the entry was to cover this low, then you are just in. So after I got the break of this high, I just closed my entry. Yeah, so that was how I got hit my TPA. So it was a good entry that we did, and I'll do breakdown for these two sides too. So thank you.